Hi, this is a price action analyst. This video is about how I put support and resistance lines on a chart. So when I'm putting support and resistance lines on a chart, I want to make sure that we're looking at a liquid market. And so a liquid market is something that is actively traded. So this is Ethereum and Bitcoin. This is something that looks actively traded. There's no days with flat lines. There's no, gaps aren't often is retested any price action. So something that is not liquid would look like this. Okay, so this is CLD with the Bitcoin pair. So this is a non-liquid market to me, and this is a non-liquid chart. So I would steer away from doing analysis on a chart like this in general. So you see these, straight lines, and you can see there's periods where, it hasn't traded. So anything that looks like this is not what I consider a liquid market. And as you zoom out, you see these flat lines and straight lines. That is something that's not being traded often. So it was traded last year, and then there's a new price up here, then it doesn't trade for a while, then there's a new transaction down here, it doesn't trade for a while, another transaction. So this is something that is not traded enough for me to consider it liquid. So that's what an illiquid market looks like. So here is Ethereum again, and you can see there's no sort of flat lines. It's price is continuously active. You do get periods where, you get very strong runs, but overall, I hope that the difference between CLD and Ethereum is obvious in the chart. So when I get a chart like Ethereum and I'm looking to put support and resistance lines on it, I need to consider the time frame in which I'm trading. So if I'm trading days, I want to start with a longer term time frame. So I would start, in this case, if I'm going to be trading daily bars, I want to initially zoom out to weekly bars, and then in that I just want to identify peaks and troughs. So here I see a peak, here I see a peak, here's a peak, there's another one here, there's ones down the bottom here. So I'll get into more detail later, but generally what I want to do is if I see a peak here and there's one here, I want to tuck it inside, and I'll get into that more in a second. It's not, when we're at the higher time frame like this, it's not essential. I just want to identify the peaks. But again, if I see a peak here and there's one underneath, I'll just tuck it inside there. So that kind of covers the weekly bars. That kind of just starts to give you an idea. What I would do here is I'd look, there's a peak here and here and here and here and a thing. So I think there's probably going to be one around there too. When we're on the weekly chart and before we go down to the daily, we just want to make sure that we've roughly covered all the peaks that we can see on the weekly. And again, what you'll notice is that I should start to see that the distance between the support and resistance levels is roughly the same. And as you get to areas where prices run harder, the gaps start to increase. That is normal. It's what you expect to see. There might be one here with these peaks here. So now I would go down to the daily bars. And what you're doing now is you're kind of just finessing these lines. So we start here, we got a peak here and then another peak here, and so I'm tucking the line inside this peak. We've got a peak there and a wash there and another peak there, and so this line's probably, if I tuck it in here, it marries up with there and marries up with this retest. This line here, we've got this peak there, we've got these here and these ones here, and so now if we tuck this one in here, it marries up with this one and this one, and so then these all represent washes of that level, kind of extreme moves, but the actual level is where it kind of tests the most often. See here, price comes up and kind of meanders along it. So that's what I would do there. Then you've got this level here, this wash, these peaks here. So anywhere, and again, it, you know, whether you put it here or you put it here, it's not going to really change much. So, you know, there is a bit of nuance to this. So, you know, you could put it there and it marries up with these 2 points, or you could put it here so it, you know, touches that one and then it marries up with that one and that one. This one here, so here I would go and look to my right here. We've got more recent price action. And then you've got this move up and this retest here, which it marries up with. So that's good enough for that one. Here you've got a wash, and then tucking it inside puts it there, and it marries up with that and that. So I would actually tuck this one inside to here, because now it marries up with that, and this is a wash, and this is a wash. And again, this was kind of a retest and then a push through. And then the bottom most support here, you've got a wash, and you see how if you tuck it inside to this point, then it marries up with that point. And if you tucked it inside here, it would marry up with this point and this point. So, I mean, again, the difference between that and that is not going to change your life. So it doesn't really matter. It's in the same area. And so that's the process. That is Ethereum. That is how I would draw support and resistance lines. And what you want to do after you've done that is you want to look at price and look to see, does it look like it's cycling between these levels? So, you know, it's moved down, it washed up. All right, it didn't come up to resistance. It's retested support, pushed off a support, retested, and then broke down through support. So, I mean, that is not convincing in and of itself, but it's come down here, pushed right up to this resistance level. And then look what's happened when it's retested support. It's pushed off that, it's cycled back up to resistance, back down to support, a push up, down through support, a retest of support, come down towards resistance, pushed up through support, supports, you know, it's offered support here on this attempt to push back up, and then price is cycled down through resistance to support, back up to resistance, back to support, through resistance. And so you just want to see that over and over again, and it's not always going to be exact. So for example, this area here, you know, this is kind of like a washing of support. You know, this level is held before, you know, it's held here, it hasn't held here, but when price is cycled back up, this is acted as resistance for it to come back and cycle down. And so the fact that price has done this here, it's okay. It doesn't negate that was support and resistance. You know, if price comes back down into this area, I still would be looking, you know, this is still a support level. The other thing I would point out is support and resistance is not always going to act as support and resistance. So for example, you know, when you see price washing it, that's still acting as resistance. You know, price doesn't necessarily, you can't just go, all right, here's resistance and just sell here. I mean, you can if you're, you know, you can afford to sit that out, but this is still acting as resistance even when price pushes through or washes resistance. You know, that's still, resistance doesn't mean I expect price to stop exactly there and cycle back down. So in this case, that's resistance. You know, it went through support to the next resistance and then came up, and this acted as resistance. So, you know, again, you wouldn't just buy here, price pushed down, but when it retested, you know, the resistance acted how you'd expect. And again, not exactly, but close. This acts as support. And then, you know, when it pounded through support, you know, it just goes straight through. But look what happens when price comes up to here, it goes through resistance and basically stalls at this resistance level and comes back down to support. So I guess the point of that is that support and resistance are, you know, they're areas of support and resistance, but you have to have realistic expectations about what happens at support and resistance. They're not in and by themselves tradable level. So I don't want to get into the trading strategy in this thing. I just want to keep it to how I put support and resistance lines on, but just bear that in mind. You know, I'd point out here, so when you're looking on the daily bar, you know, that looks like it's just pounded through there, but you can see that price, you know, there was resistance there, but it eventually pushed through. So let's move on to another example. Okay, so this is the SPY, the S&P 500 ETF. So these are weekly bars again, and so I'm going to mark up support and resistance. I am just going to look for peaks and place the lines. So again, you know, there's a peak here, there's one here, but this is tucked inside. So if I put it here, it marries up with this, it marries up with these peaks and this one. So I'm going to put one here. And again, when I tuck it inside, it marries up with this point here, and you can see prices kind of zigzag through it. That's okay. That also indicates that that's a support level, and that idea that, you know, support and resistance line there is being washed is confirmed by the fact that when it retests, look at, you know, when it retests, that level holds. So that's where I would mark that support and resistance line, and then it marries up with this and with this. So these there, and then this top here. And again, I can get more detailed, but you know, when I see that top, I'm always just tucking it inside a little bit here. And again, when I see this here, but you know, if I was to place the line here, that doesn't make any sense. So this is likely the support level, and then this is a wash of support, which was, you know, deep inside and almost came down to the support and pushed out. There's another one here. And so you'll notice what you're starting to notice. Well, let's just go a little bit further. So here's a peak and a peak there. Yeah, so this one here and this one here, I would put a line in here and there. And again, remember, these are weekly bars. This doesn't look like much distance now, but it will when we go to the day. So notice that these lines are roughly the same, roughly the same distance apart. And you know, as you see price start to run, you might see that the distance starts to slowly increase. You see the distance here kind of got smaller, but you can see price kind of congested. So that looks okay so far. So let's go to the daily. So going down to the daily now, it just lets you sort of more accurately place these lines, right? So, you know, I've got this bottom here, and I tuck it inside, and that kind of marries up with this peak and these levels here and this one here. So that looks good. And again, so now I've got the benefit with these lines in, I can look at this top and go, all right, well, this is roughly the same distance here. So let's say I mark the line in here. What happens further down? Well, you get a wash here, and it comes down to support, and it comes back up to resistance, and it looks like price is kind of peeling away from that. So that looks like a support or resistance line, and it's roughly the same distance. Here, you know, I would normally tuck that in, but you've got these prior highs over here, so that one looks okay. So when I tuck this one to this point here, it marries up with this high here. This is a wash of support. And then down here, you can see that there was a level here, you know, washed it there. So based on this, you know, there has to be a line somewhere around here. So that looks good there. Another one here, this point, this point, this point, this point. So that one looks good. So here we've got, so there's a pivot there. There's one here, there's one here, there's one here, there's one here. So it looks to me like there's probably a level there. So again, it's all right if it's been washed, but it's held there, it's held there, it's held there, it's held there, you know, it's been washed there, didn't really do much there, and it's held here. So there would be a line there. Move that. So this line here is tucked inside of this pivot to this one, and that's largely inconsequential everywhere else. So again, that's only got 2 points. So what I'm thinking now is, where's the next level? So here, and then there's one off these peaks here, which marries in there. So again, the thing that you need to realize here is what's happening is these lines are close together because this price action was slow and congested relative to like this price action. But when you get very fast, high momentum price action like this, it goes through, you know, it just chewed through these levels. These levels were kind of created by here. It doesn't mean that these levels are not valid. You can see this level worked, this level worked, you know. And again, you know, support and resistance levels by themselves are not tradable events. You know, there's a lot of nuance that goes into, you know, where you would hit a trade and where you wouldn't. But I'm gonna leave it there. That kind of looks about right because I want to concentrate on here. But you can see that, you know, by these lines, they're opening up here because the price action starts to move. You know, in the distance from here to here, price has moved a long way, whereas in that same distance here, you know, the amount of increase is a lot smaller, and so the lines are closer together, and as price starts to move faster, the gap between the lines is increasing. So that's what you want to sort of expect to see on most charts. So let's look at one last chart. This is GLDLF. It's a gold mining company. I'm actually thinking about taking a position in this company. Let's just go through the exercise of marking support and resistance. So, you know, peak there, tucking inside, I come into these levels here. So that's probably a level there. There's another one here. So you can see these peaks here. I want to tuck it inside of that, and then it brings me up to this level here. So that looks okay. And the easiest way is to just, you know, identify the major peaks and just tuck the level inside. So, you know, here and here, this is kind of illiquid price action, so I would focus on this and then tuck it inside to this peak. Here's a peak that stands out, and again it marries up with these ones. Here's some more. And again, remember, this is with weekly bars. So, you know, if this was a daily chart, you might not be putting the same levels there. So here's a peak and I'm tucking it inside. There looks like there's a level here. There's in the middle, there's a test there, another one there, and then over here you've got this. See how it's come up here and then retrace back down to this level, so it's held here. So there looks like there's a line there, and this is what you want to see, right? These lines are roughly the same distance, and then it increases. Now there might, when we go down to the daily, there might be a line here, but this is roughly what we want to see. You could also say with this price action here, there's a level there. And so again, that fits in with the sort of distance. Let's just put one here and then see how that looks on the daily. Gone into the daily bars, and now it's just a matter of fine tuning those levels. So again, that now touches that and that perfectly. This level here now looks like it wants to be down here. So it marries up with this, and then it better aligns with the lows here. This peak here, if you tuck it inside, it comes down to this one and then better marries up with that. So now this line here on the daily, this looks like it doesn't make a lot of sense here. So I'll go across. Let's just see, this level is 0.56. So that level does eventually look valid. So whether you tuck it inside to this point here or tuck it here doesn't really matter. So this was 0.56. This is the next one. So that, you know, there's your peak. You tuck it inside to this level. It marries up with this, marries up with this, you know, marries up with this level. So now this line here, you've got those peaks there, and then if I tuck it inside, it comes up to here and then marries up with this line. This line here I don't like because it's at this peak and you want to tuck it inside. You also kind of want it to be the same distance. It looks like this distance is kind of too small. You've got this peak here, so if I tuck it inside, now it marries up with this, it marries up with this, with this, with this, with this. And again, it's all right if the levels are washed somewhat. You kind of want to see that. So that's a better fit for that line. Then you've got the next line here, which marries up with this peak and it's tucked inside, marries up with this, marries up with this and this. So that looks good. And then this level here, you've got this peak and this peak. And if I just tuck it inside here, it touches this. This is a bit of a wash, that's a bit of a wash. So again, not a major difference, but that's where I would put that line. So here, you could put a line here, but then, you know, does this make sense? Because now you've got, is price cycling between these two levels? And you can see it's, I mean, it does there, but it's not really. And it doesn't fit this, as this price is moving up with more and more strength, you want to see the gaps between the support and resistance levels becoming wider, and this kind of doesn't really fit that. So what I would do is I would probably tuck this line in here, and then what happens is now this is a wash. That's support, resistance holding, held again. So you could even tuck it in as far as here. A wash of resistance, retest of resistance, back down to support, resistance, support. It went through, but it held on the retest, back down to support, held again, back down to support, pushed through this resistance level, but came back and held it again. So, and then this is a wash, and then it came back inside, and kind of when it pushed up again, this level held again and came down. So that makes more sense. Rather than a line here and a line here, you've got, you know, one resistance level that makes more sense in terms of the price action and sort of the growing distance between the support and resistance levels. And again, you want to see that growing distance because you can see the price is starting to move. You know, it's much bigger moves than, you know, historically, right? You want to see those lines start to open up. And so that looks pretty good. And again, those support and resistance lines were drawn off this previous price action over here. We didn't even look over here. So let's see what happened when price came back to those levels. So it pushed right through resistance. And again, so it's not a tradable event by itself. If you just had a short here, depending on what instrument you used, it would have pushed against you. But when price retraced, look where it came. It came basically to the tick of that support level. So it definitely stayed valid. Pushed up again, retested it again, pushed up. It's come down and washed it, so it hasn't really held there. It's kind of a deep wash of support, and then it's kind of pushed up again. So that action there, though, is indicative that that level was definitely valid. And so you could mark the next line in, you know, here's your peak. You can mark that next level in and see it's a little bit wider than the previous level. That looks good. That's how I would mark my support and resistance lines on the chart. And so the options that you have as well is I've got, you know, choices as to the width of that. If I make it, you know, very wide, they're kind of too prevalent on the chart. I think if I was just trading this personally, I might have the really thin lines. You know, I don't want them to stick out too much because I don't you know, again, the support and resistance line in my mind doesn't need to be too prevalent, A, because I've done it a lot, and B, it's not, you know, in and of itself, it's not that important. It's just kind of giving you a outline of the market structure. But for the purposes of these videos, I've made it a little bit thicker so that the choice is kind of yours. I'm just saying that because you don't want to overemphasize this. So, you know, if price cycles back here, I don't have a buy order at 1.9. And again, I don't want to get into the trading strategy because it's very nuanced and detailed, but you don't just trade these support and resistance lines in isolation. So I would have thin lines on my chart, and they're just kind of there in the background to give me an idea of where price action is at in the context of the market structure. So I think I will leave it there. If you have any questions, please write them in the comments. But I just wanted to make a video in some detail about how I put support and resistance lines on a given chart. And again, I like to do that specifically with instruments that have liquid price action. Thanks for watching.